For more on how retail investors are playing this volatility is Victor Jones. He's CEO of zero commission trading startup Doe. Victor, good to see you.
Good to be with you. Thanks for having me, as always.
Sure thing. First off, you're in the same space here as Robinhood. What are you seeing in terms of customer growth, customer engagement, how they're participating in this market, and whether, in fact, you see a lot of uninformed speculation or other trends from your client base?
Yeah, I definitely want to address the uninformed speculation in just a moment. But first, let me kind of set the table for what we've seen essentially just since March. Our account base has doubled since the beginning of March, and our activity has gone up significantly as well. We're at 8 times the trading activity that we saw since March. I think there's 2 ways, to think about that narrative, frankly. We are at elevated levels of volatility and have been throughout the entirety of that time frame. And I think people are utilizing increased volatility to get out of names that are having these significant runs. Like, you've seen them 5, 10, 15, 20% in a day. People are not going to hold on to those stocks just to call themselves long-term traders when long-term averages are returning annually 10%. They're utilizing these rallies as well as risk in the market to close out risk on a more frequent basis. We here, as well as our parent company, we continue to talk about trading small, trading often, especially in volatile periods of time where you can manage and control risks and remain nimble. And if I could just talk about, the growth that we've seen from a customer point of view, because that's our growth. But what has the customer actually done since early March? And our average balance has grown in size 125% since early March. And I think in portion, that is because of market performance. But another big part of that is the commitment of this generation and our users to saving and investing. And at the end of the day, there's a lot of negative narratives out there, but this is a positive narrative. Remember, Mike, there was whispers of potentially closing down exchanges here and early on, and that did not happen. And because of that, we're seeing record amounts of participation amongst retail traders.
No doubt. That's a good thing. We've been looking for the retail investor to return. They're back. They're back with a vengeance. And clearly younger investors who have a longer time horizon can afford to take more risk. The question, Victor, is, are they taking too much risk? Some of these names that are in the spotlight when it comes to the retail activity are highly speculative. Some of the bankrupt names, for instance, a name like Nicola, who hasn't had any revenue but has surged in market cap. Is it just too much?
You know what? We agree 100%. I think one of the things that we sought to differentiate ourselves with is the fact that we have high subject matter expertise coupled with the ability to have high touch points with our customers. This week on our podcast, Social Currency, we broke down what bankruptcy actually means. There are a lot of new traders in this marketplace. 75% of the customers that come to Doe have limited to no stock trading knowledge in the past. So it's incumbent upon the broker. It's incumbent upon these institutions to be a partner to these new participants in our marketplace and help break down what is actually happening through the course of a bankruptcy. Where is an equity share stakeholder in line as opposed to a debt stakeholder? We are doing our part to make sure we are building an informed, savvy community of traders. I can't speak universally, but I can say we knew when volatility showed up in the marketplace, that's when people are going to want to partner. That's when they're going to want reliability. And that's what we spent time preparing for as we launched our business, and we continue to service our customers.
Victor, what do you make of the idea that it's just a coincidence of people being at home and idle and there's no sports to bet on and all the rest of it?
You know what? I don't think it's a coincidence. I do think that the fact, when you shut down sports and you shut down people's recreational activities, and the market is one of the only games in town, I do think that has a lot to do with people actually having the time. Remember, when you ask people, why are you not participating in the marketplace? Of course, you're going to get people that think they don't have either the assets or the experience, but one of the top 3 is always the time. Well, a lot of people have the time to sit down and commit to understanding and taking control of their financial future. And again, I think this is a really good thing that we should try to understand. How many people might come on this station and they talk about that time horizon and risk tolerance? And I do think we should understand that when young people are taking additional risk or more risk than, let's say, somebody's approaching retirement, there is a narrative sometimes there where their risk appetite is not matching what you would typically see. But that is not the case all the way around. Our customers have been, I think, responding to market stimulus and volatility in a very logical and orderly fashion, and we've been a big part of that, helping to inform them along the way.